Welcome back. As the economy begins to rebuild, there's a growing swell of investors looking for places to park their cash. But just what kind of buying opportunities are they looking for right now? And how are they feeling about the future? Well, when it comes to investment sentiment and intentions, my next guest has got plenty of insights. Co-founder and publisher of Wholesale Investing. Welcome, Reuben Buchanan, mate. Thanks for joining us on the program.
Thanks, Peter. Thanks for having me on.
Look, mate, why don't you just give us a quick rundown of your entrepreneurial background? Because you've been in a lot of spaces in your short life.
Yeah, well, about 2001 I started a magazine called Wealth Creator magazine. Prior to that I was involved in property and stock market. I used to actually educate people on stock market investing as well. And I thought, you know, there's no magazine about wealth creation. I started Wealth Creator. 2002 I think I kicked it off and ran that for about 3 years. I found that I wasn't the world's best publisher. It's a lot of hard work producing a magazine.
It is hard, isn't it?
So I ended up selling that business. But what I did do over that period of time was meet a lot of entrepreneurs, a lot of high net worth individuals, a lot of people who are in the rich list, and that sort of inspired me to get out and do something else. So I got it since then. After I sold it in 2005, I got involved in capital raising and helping companies to either raise capital, you know, reduce their debt, de-risk the business, become investor ready, sell the value of the company at the highest price, maybe even sell the business. What I identified through that process of helping other companies is that it's very difficult for companies who are raising capital to find investors, and it's hard for the investors to find the companies.
Mismatch, isn't there?
It is, and the way it's actually done is like, you know, through networks and networking coffees and things like that. And it's really hard to find the right investor who will actually be a good match for your business. So 12 months ago I launched another publication. But really it's a
niche, isn't it?
It's a platform that connects investors with opportunities. They want to find each other, but it's been very difficult for them to find each other over, I suppose, forever.
And I guess businesses have struggled with their relationship with venture capitalists, often called vulture capitalists, because it's often been a very one-way street because there aren't many alternatives out there. And by the way, the venture capitalist deal is not an easy one as well.
No.
But did you see that there was like a potential to get in under that sort of area and start mixing the smaller businesses as well?
Yeah. Well, the venture capital space in Australia is actually quite small. There's less than 40-odd firms. Right, private equity, which is sort of a more mature form of venture capital, there's less than 200 firms in Australia. Where most companies, especially...
So 240 sort of official type funders of business. So there's not a lot of people, and they actually do manage quite a significant amount of money, about $25 billion. And they pick the best of the businesses out, don't they?
They do. And people tend to they're relatively easy to find. You can buy a few guides and things and actually find these people. But if you're an earlier stage business, say in the first sort of 3 to 5 years of your growth, or certainly in the first 1 or 2 years where you're trying to get going, where you're likely to get funding is from private investors, and that's what I've found in the last 3 years working with companies, helping them to raise capital. It's the private individuals, and some of these are high net worth. Some of them have more money than venture capital firms, or even some of them have more money than private equity firms.
Yeah. Reuben, do you find some of these people who've made lots of money, could be former CEOs of companies or former entrepreneurs themselves?
100%. And I found that when I was at Wealth Creator, when people made a lot of money, maybe floated their company on the stock market or sold out of their business.
Like the guy who just left, Roger Montgomery.
Or Dominic, for example. He's another one, a friend of mine as well. He's actually a director on Wholesale Investing. But once I've made some money, then they're like, oh, I've got all this money, but they've got the entrepreneurial spirit still inside them. So what they want to do is then not invest all of it, but invest a portion of the money and in a way become venture capitalists themselves and go out there and find some companies that have got some future growth prospects, but not just invest. They actually want to get actively involved, go on the board and help the business grow, and potentially maybe even float their company and do what they did, you know, which is how they made their wealth. So there's a lot of people around like that. In fact, most of our database for wholesale investors is actually made up of these high net worth private individuals who have made their money through building up and selling a company themselves.
Okay, well, you mentioned Dominic, and Dominic was on our program, you know, some weeks ago. Why don't you give us an example of what he's actually doing? Because he actually is on the lookout for great online businesses, and he wants to sort of get a slice of the action and also help them go to the next stage.
Dominic is a classic entrepreneur/investor. So
tragic entrepreneur.
He can't help himself. He's very skilled. When he was at Destra, he did about 30 or so acquisitions. So he knows how to buy companies. He knows how to buy companies. Use using investors' money. When he left Destra about 12 months ago, a lot of investors are basically happy to back him. So he's got I think about 12 or so investors that will, if Dom finds a deal and does his own due diligence, they will back him into the deal.
So he's collected probably Melbourne family type people who've put the money together and they trust him. So he sees a small online business with a lot of potential. He might come along and say, well, we know you need $5 million to go to the next level. We can present it, we'll take a certain amount of equity and also provide advice and expertise.
That's right. So Dom can put in capital. He can also go on the board and add strategic value. He's got an incredible network in that space. He can bring that to the table as well. So if I'm an entrepreneur and I've got a start-up online type business and I'm starting to get some traction, getting someone like Dom on board, even if the valuation is a lot lower, right, having him on my board brings credibility, it brings networks, it brings money, and it could get me to places I could maybe never go to if I was just out there trying to do it by myself.
OK, that's enough promotion for Dom, but it's a great example. It's a great example. But you're saying there are lots of people like Dom.
Thousands of Dominics in Australia.
And also people behind those sort of people who'll put the money in.
There's thousands of Dominics in Australia, like Dominic, and they collectively have billions of dollars available to invest, and a lot of that cash, like you were mentioning before in the previous interview, a lot of that money is actually sitting on the sidelines. And what investors are recognising right now, and this is what's come out through our survey of our investor database, is that they recognise that right now is almost, call it a once-in-a-lifetime opportunity for them to invest into private companies that maybe could potentially list or have global scalability at values that may never be seen again.
Now, why are you saying that businesses necessarily are showing low values? We know stock markets have, because there's a lot of investor sentiment there, but I would figure some small start-up franchises, maybe with 10 outlets, a lot of investors would come along and say, well, I can see this is going to be a 300, 500 Gloria Jeans type franchise. Are those still pretty cheap as well because of just the general environment and the cost of funds being so high?
There's a strong relationship between the value of public companies and private companies. So as a public company, because the public companies are a good guide, the PE ratios, as a public company's values have dropped, so has the value of private companies. Okay? So, and the reason is very simple. If I'm an investor and I've got millions of dollars, why would if I can invest into a public company at a certain multiple, why would if the private company is of a similar multiple, why would I invest in that? It's still still more risky. So public companies are pushing down, and at the end of the day, if I'm an entrepreneur trying to raise capital, I still got to compete with those markets. So investors are, if they're going into private companies, they are taking more risk, and that risk has to be reflected in the reward ratio.
Okay, so you put out this thing called the Wholesale National Investor Survey. So what does it actually show?
Okay, we ask, essentially, we've got a database of about 4,200 investors.
People with deep pockets.
Well, everything from a small individual, say with $500,000 to invest.
Yes, so that's the kind of starting point, some of the $500,000, or is it even less than that?
Oh, there's people with less money than that, but because it's a wholesale database, right, there's no retail investors in that database, right? So it's a wholesale database. Once you get into retail, there's all sorts of different issues with ASIC and so on. So we stick to the wholesale market. They've got plenty of money. They like to invest. They're educated, savvy investors. So it could be anyone, say, from $500,000 right up to private equity fund managers looking for private opportunities. They only really look in the private space, and they could be managing, $500 million or more. So there's a big range of companies that we survey. And
is there a big appetite to provide money now, or is there a bit of hesitancy compared to, say, 2 years ago?
There's a massive appetite to get money into private companies right now. Okay, so it's different from what we're talking about with the public company space, but I'd say it's sort of in a parallel. But investors who are interested in the private space probably want to invest quite a significant amount of their portfolio over the next 12 months. And even since we've done this 2 surveys, we did one in May, did one just came out today actually, we've seen the amount of money they've got in cash actually drop by about 25%. Okay, so they're actually actively putting money into deals as we speak. So for a company that's looking to raise capital, what they might be thinking is, oh, I better wait until the market recovers, then I'll go and try and raise capital. But it's actually the wrong way to think. The investors are wanting to invest right now, and now's the time to go out there and put your deal on the marketplace and get in front of investors.
And I guess you're
whilst I've got cash before they spend it all.
Because the stock market's also luring money, you're probably better off getting in there before... And I guess if the market pulls back 10 or 15%, will private money be hesitant as well?
The public market is always going to be a reflection of private markets,
Yeah,
but there's some benefits of. There's obviously negatives with investing in private companies. One of them being liquidity and transparency, right? But the benefits are private companies are usually got a lot less debt. They're not as laden with debt because it's harder to get debt if you're a private company. The banks just won't lend as much money, and also too, if there's a hiccup within the private company, it doesn't get kicked around on the public markets, the share price. The management isn't under scrutiny daily, so there's lots of other benefits of being a private company.
We're out of time, mate. It's a fantastic revelation. But if people want to know more, clearly there's a website.
Yeah, wholesaleinvestor.com.au is where they'll find us, and they can download the full survey from the website from tomorrow.
Reuben, thanks for joining us, mate.
No worries, Peter.